So it's that picture with me and Gary, that was when we were with Experian and we won a PlayStation 2. That's our identical twin granddaughters. That's who we're leaving town with tomorrow to go to Florida for 2 weeks. And that was just at Christmas time this year. I just wanted you guys to meet us because we don't get to see you personally, okay? For those of you that don't know, I mean, there's nothing sexy or pretty about credit, but it's so vitally important to just about every aspect of your life. You know, I mean, heck, your credit score is more important for your automobile insurance rate than your driving record, believe it or not. So the history of FICO actually started off as a business opportunity. It was really made to make everything have a level playing field, because it used to be, you know, banks and institutions, they granted money on who you were, you know, who your family was, what side of the railroad tracks you lived on, if you were a man or a woman or black or white, or so many things. So they made a numerical algorithm that didn't take anything into account other than your ability to repay debt, okay? But credit scores are so confusing, especially if you're a realtor or a lender. You know, you'll have somebody that pulls their credit score and they're saying, but wait a minute, you know, this one says I'm a 650. You do my pull and I'm a 585. What's the deal, right? They just don't know. So we're happy to help them learn. But as you can see on this screen, FICO, that's the Coca-Cola in this credit score world, right? That's who Equifax, Experian, and TransUnion want to be. As a matter of fact, those three got together and came up with the Vantage score to compete with FICO. Okay, but you can see all the different ranges there, right? The good news is the risk buckets tend to be the same, whether you're a poor risk, a fair risk, a good risk, or a great risk. All the numbers tend to line up for the risk buckets, okay? So I know that this happened every time, because this just happened a little while ago. They'd gone to Credit Karma. He pulled his credit report himself. He was a 650. He was so excited. He runs to the lender. He runs to his realtor. The realtor immediately takes him to the lender, does the pull. He's now really a 585. And they don't understand what that means or why it's so different. They think it's the data that's different. The data is the same. It's the algorithm. See, that mortgage algorithm is so strong, it literally will flag creditors or collectors' computers if they've ever had a collection out there. You may see, especially if you're a lender or a realtor, the mortgage person will do a hard pull, and like 30 days later, they've got new collections popping up. That's because those collectors know that person wants something big, and their best way to get paid on that is to pop it out there, okay? So any kind of credit score you can see for yourself, that's called a consumer pull. That's the same kind of pull that you're going to get, you know, if you're shopping at TJ Maxx or Home Depot and they say, hey, open a card and get 10%. That's typically the algorithm they're going to see. But that mortgage algorithm is so strong, okay? So for the lending algorithm, I know we were talking about how the forbearance happens. And, you know, on things like that, I say the big print give us, but the small print taketh away. Because I actually looked on our mortgage, we're with PNC, and they were talking about the forbearance. And you read, oh yeah, they'll put you in forbearance for 3 months, for 90 days. But what they don't tell you, because it's in the real teeny tiny fine print, that on day 91, if you don't have all 4 months payments paid, you're going to get rolling late remarks. You said somebody was in forbearance for about 100 points. Imagine even stronger with a rolling 90-day. It's crazy. So it depends on how the servicer is going to report those, okay? And the guidelines change all the time. We're in a unprecedented time, so I'm sure things are all up in the air. It's like somebody took our little snow globe of a world and just shook it, and we're just waiting to see where things fall, right? But typically, in that lending algorithm, it likes to see how you balance your finances. okay? For minimum in a lending algorithm wants at least 3 active, open, positive trade lines in your name. So this is where being an authorized user doesn't really help you, all right? And a good mix of those 3 would be 2 revolving and 1 installment, okay? Of the 850 points available, 255 points come from how you balance things, how well you are a balancer. So I know what you think makes logical sense, like paying off and closing an account. Well, you shoot yourself in the foot. Or even paying off your credit cards down to a 0 balance. If they report that 0 balance, you actually get a lower credit score. Okay, think of it like a teeter-totter. When you're maxed out, it hurts, but when you have a 0 balance, it also hurts. Okay, so if all things were equal in a credit file, and one credit card had a 0 balance, and the other credit card, say, had a $10 balance, the account with a $10 card would have a higher credit score than the one with a 0. Totally makes no sense, but that's how that one works, okay? Now, we're not attorneys. For those of you that don't know how we got started, I used to work for the attorney here in Dallas that had this computer program. And I was working for him for about 9 months. And the inventor of this computer program called me and he said, Dana, I don't know what you're doing. Your files outperform everyone's nationwide. Can you tell me? So I told him, I said, I give my clients an action plan. I tell them exactly what to do while our computer is working to put their file in the best light for the lending algorithm. See, a lot of people don't know that there are so many different algorithms out there, and the lending algorithm is the hardest. So if you get the hardest algorithm right, all the other algorithms fall into place, right? So that's what separated me from the attorneys using this, because I knew how to balance a credit file. Well, after he said, okay, how do you know this? And I told him IAPDA certified as International Association of Professional Debt Arbiters. That's from the debt mitigation side. And the fact that we used to work for Experian, when I talked to him, Gary was still at Experian. And he said, my God, you are who I'm looking for. These attorneys are charging way too much for this. They're not touching the file. These are federal statutes. People that need it can't afford it. He said, I invented a system to help the little guy. I did not invent it for class action lawsuits. I want you to open your own company and let's go national. So that's how D&G got started. I'm the D, my husband Gary's the G, okay? So again, we're not attorneys. That's the important part. So don't take anything I ever say as legal advice. But what we did is we took the FCRA, that's the Fair Credit Reporting Act. It's like over 1,600 pages. But basically, the important parts for us are 3 bullet points. 1, whatever's on a credit report must be 100% accurate, regardless if the debt is owed. Guys, creditors tend to break the law all the time, and there are fines already put in place. And if you catch them breaking the law, they get to pay those fines or they get to delete the file. Second, under federal law, any person who knowingly and willfully obtains information from a CRA, that's a credit reporting agency, under false pretenses, i.e. getting a credit report on an individual without his or her permission, shall be fined under Title 18 United States Code or imprisoned for more than 2 years, imprisoned not for more than 2 years or both. This is where permissible purpose is. You may hear people that say, hey, so-and-so pulled my credit and I didn't give them permission to. You'll hear this a lot from people that are car shopping. I will almost guarantee you, in just about any report, any request to get a credit pull, permissible purposes is on there. What that means is you're giving them permission to pull your credit until they see what you're shopping for. You'll see that a lot with automobile dealers, okay? So when people dispute those inquiries from the Bureau, this is where it can get into trouble with, like, people disputing inquiries because they don't know. What literally can happen is when that dispute goes to the Bureau goes directly over to the company, and it's never the low person, right? So it's the CEO, let's say, and they can stop letting them report to the bureaus while the investigation is under control, right, or under investigation. So it can go from the CEO down to the VPs, to the executives, to the branch managers, and then to the lowly salesperson who did that pull. Almost I would say almost 10 times out of 10, but let's just say 9 times out of 10, they've got that paperwork, okay? Because it's a big deal to pull credit without permission. That lowly salesperson can get fined, well, can lose their job, really. And then they send that proof all the way back up the chain of command, back over to the bureau. The bureau now marks that person's file as a frivolous disputer. That's a bad thing, okay? So that's why there are easier ways to get a few points than try and dispute something like that. It is against the law to knowingly dispute accurate information on a credit report. That's why a lot of credit repair companies, well, they act as that person. They get their driver's license, their social security card, utility bills, bank statements, and they have them sign typically a limited power of attorney. But that's the meat on the potato right there, okay? Now, types of credit, you guys know most of this, but I know this is being recorded. So there are some people that don't know what all the long-term is a mortgage, your auto loans. Short-term could be like utility bills. You've probably seen those, if people left own a utility company money, it'll be on their credit report. That's a short-term bill. Secure debt, it means it's required of something to value. That's why most cars, they're secured debt, right? Unsecured, well, that's just simply secured by air. It has absolutely nothing of value, and it usually has high interest. I mean, these are credit cards, right? Delinquencies, charge-off accounts remain for 7 years plus 180 days from the date of the initial missed payment that led to the charge-off, okay? Collection accounts, they can remain for up to 7 years and 180 days from the date of the initial missed payment. And closed accounts are no longer available for use. If they have delinquencies, late remarks, they're going to stay for 7 years. If they're positive, they can stay for 10 years. The big difference between an open account and a closed account, open accounts weigh more for a credit score than a paid closed account. That's why when let's say you pay off your auto loan, your credit score takes a drop. You're like, what? That's totally not fair, right? Which I totally agree with you. But it went from being active and open to paid and closed. So it went from saying like weighing 10 pounds to weighing as little as 2 to help your credit score, okay? But these are things that people are looking for. How long can they report these things? This part's boring. Trust me, I know that part. But you can have all that. You can refer back to this recording to that. Any creditor that reports to the bureaus has to upload all of that raw data into eOscar, okay? eOscar, it's a super data storage computer. Any creditor that reports has to upload that raw data. That's where Experian, TransUnion, and Equifax, that's where they pull their data from to come up with a credit score, okay? So anytime there are violations, it's going to be in that raw data. We got the name, the credit cops, D&G, that's when we first got started, Dana and Gary. Our last name's LaRue. We're going to treat you fair and square. It's Tiffany Blue because it's high quality stuff. About 2 years in the business, there's an attorney in town. His name's Jeff Ross. He sues credit repair and debt settlement companies. We met for lunch, and you guys don't know me yet, but I'm kind of a smart aleck. So as soon as we sat down and started talking about this computer system, I gave him $1 to invoke attorney-client privilege. Luckily, he thought it was funny. Anyway, so I told him how our computer worked, and he's like, my God, if you don't call yourself credit repair, what do you call yourself? I'm like, not credit repair? And he's like, no. We got to think of something better. So he came up with the credit cops because our computer holds creditors accountable to the law, okay? See, here's the important thing. Our system doesn't have to assume anybody's identity. Everything we're dealing with is in raw data. See, credit repair companies, this is why I would like roll my eyes when people call me credit repair. Credit repair companies have to have a copy of your client's driver's license, a copy of their social security card, a copy of utility bills. Sometimes they'll ask for bank statements, and there's always a limited power of attorney. Our computer reads the coding from a MyFICO credit report. Remember I told you FICO, that's the Coca-Cola in the credit score world. We are a national company. We work nationwide, border to border. Since it's a computer program and no human hands touch the file, we offer education. Anything that makes it through our system is legitimate debt. Guys, if they can prove you owe it and they didn't break any laws, doesn't matter what you read on the internet, legitimate debt has to be dealt with. That's where the IAPDA certification comes in to help our clients. That stands for International Association of Professional Debt Arbiters. Like I said, we're not attorneys, so legally we can't speak to creditors on our client behalf, but we can guide them through that settlement process. Make sure their SIF letter, stands for settlement in full. Make sure it's worded correctly so the amount they thought they got negotiated can't be resold and started all over. And they count on the public not knowing the intricacies of that. So our system reads the coding inside the eOscar. You'll see the little zombies down at the bottom. I'll show you what that means in a little bit. But those creditors are the ones that enter the raw data into eOscar. And the bureaus, that's where they pull the data from to come up with a credit score. As you can see, our system reads that coding. Let's just say years ago, you applied for a credit card, you got approved for that credit card, and then every time you made a purchase, you swiped your card and signed the receipt, right? So legally speaking, that original creditor will have all the documents required to prove this is your debt, right? They've got everything they need. Let's just call that a full color file. But then one day, catastrophe strikes. It's either, a job loss, a death, a divorce, medical issues, something happens and you can't keep the payments up on your credit cards because, well, quite frankly, you're trying to keep the roof over your head and food on the table. So when it gets to 180 days of no payments, by law, that creditor must stop charging you interest, penalties, and late fees. They can't keep piling it on you, okay? When it gets to that point, now your debt can go three ways. One way it can go is legal. Now, they can hire an attorney, take you to court, and chances are get a judgment, okay? That's an option for them. They can do it. They tend not to like to do it because it does cost them more money. The other option, they can hold on to their full color file and then they'll farm out the collection attempts with a third-party creditor. They'll do that because that way they at least get some money, whatever that collection agency is able to get. But the third, the most common, is that original creditor will charge the debt off. You see, when they charge that debt off, they get a tax break. And then what they do is they make a copy of their full color file in black and white and sell that copy to a collection agency. So they have the original creditor, the full color file. They charge the debt off. They make their black and white copy. They sell that debt to a collection agency who has 180 days to collect on that debt. When they can't collect on the debt, they'll make a copy of their black and white copy, sell it to another collection agency who has 180 days to collect on that debt. When they can't collect on that debt, they'll make a copy of their black and white copy and sell it to another collection agency. It sounds ridiculous because it is. If you've ever seen a credit report, sometimes you can tell it's the same collection appearing again and again and again. You see, since there's no law that requires the creditors to report to the bureaus, when they sell the debt, they're not necessarily in a hurry to go back and no longer lay claim to that debt, okay? So on the bureau side, you may see 4 or 5 different collections, but only one of them is real, but you're getting dinged for all of them. Does that make sense? And that's bad, okay? That's bad, but that's not the worst. The worst usually happens about, say, 2.5 to 5 years down the road when it gets into the hands of what's called a junk debt buyer, okay? If you've never heard that term, junk debt buyers are investors, and they purchase millions of dollars of bad debt for pennies on the dollar. what they tend to do is they tend to change that date of last activity. You know, what should have been years ago when that original creditor first charged that debt off. And what they'll do is they'll change that date to the date they purchased that debt. And what that does is that makes that collection look brand new, and it weighs much more on their credit score than it should, and it artificially lowers the debt. That's when they broke the law. That's what our computer program was specifically designed to go after. Okay, so it's a really quick process. The computer's done in 90 days. The first 45 days, basically, all in code, it's basically asking them to prove what they're saying to the letter of the law. So we do get a lot of deletions that first 45-day cycle. But what it's also doing, it's laying that groundwork the government requires to pursue the violations we already know are there. That's what happens the next 45-day cycle. So pretty much our clients are in, out, and done in 90 days. Now, the important thing for me, for you to understand, no human hands touch the file. The computer is doing all the work, okay? The second 45 days, really, that's when our guns come out. That's when you first have to give the creditors a chance to correct their errors. You know, you basically show them date, time, section, paragraph, law broken with proof. And guys, a letter writing campaign you just simply can't do that. I mean, it just simply can't do that typically. So, and the way the law reads, and again, I'm not an attorney, but basically it says there's a $1,000 fine per violation per bureau, and they can put a stipulation on there to make it per month. Once the creditor is aware of that, their choice now is to correct the file, re-report, and pay the fine, or delete the file. It's all up to them, okay? So when inaccurate remarks are removed, scores tend to rise, okay? So these are all mortgage scores. We only work with mortgage scores. We don't work with the consumer algorithm because mortgage is the hardest, and most of our clients are looking to buy a home. So you can see when this person came to us, their mid score was a 585, okay? After 90 days, guys, most of our clients are 640 lendable if they've done everything on their action plan and it's had time to report to the bureaus, right? But this is after a 90-day process. Most of our clients are 640 lendable. I will tell you, we work with them until they are. Every action plan is different, and you know, some people need more work than others. Our fee is flat, okay? We work with them until they're 640. But this system deleted 12 illegal accounts on this one, and they finished their action plan. So they literally went from a 585 to a 685 in 90 days, right? Now this guy right here, those 6 items that got deleted, for him, those were all paid collections, okay? Here's a dirty little secret. This poor guy, he'd been working on his credit, doing everything the internet told him to do for over 2 years. Luckily for him, his realtor had gone to one of our lunch and learns and had heard about this system. So, and I'm telling you guys, but on my advertising, I have after 90 days. For him, those 6 items were paid collections. They all had a 0 balance. So we didn't technically have any collections to go for, okay? So this was literally going after the coding, because sometimes when you pay off those collections, those creditors will put code inside eOscar, and that code acts like an anchor and holds a credit score down. These are things your eyes cannot see, okay? I'm sorry, it's going too fast for me. So when he came to us, his Experian was a 570. In real life, that 636 happened in 45 days, a 66-point jump. 606 became a 697 in the same 45 days, 91-point jump. Equifax went from 566 to 680, 114-point jump in 45 days. He did everything on his action plan in the first 12 hours. So the great thing about this is because we're using my FICO, they're being monitored. So they literally get to see things happening on a daily basis. Because it's my FICO, there's no hard pull. If you're a mortgage person, you know when you do a hard pull, bureaus tend to sell that data, and then you've got people calling your people, right? All our clients have to do is follow their tailor-made action plan. Everyone is tailor-made just for them. They don't have to mail stuff. They don't have to write stuff. They don't have to do anything. All they need to do is talk with us. We've got a secure portal that's HIPAA, FINRA, and FACTA compliant. Way more security than we need, but I like it. They have little tick off boxes so we get to see what's happening, because while they're working, they know what they're doing. We're blind. We do offer a flat fee. We're with them, like I told you before, until they're a 640 mortgage or higher. We don't have a monthly maintenance fee. Our goal is to get them in, out, and done in 90 days, right? We do offer a public service discount, and we offer a satisfaction guarantee. Never had to use it, just got to do what we tell them. I mean, that's be reachable, teachable, and coachable. That's what we're looking for. Again, we don't have to assume their identity. I love that picture of her. Okay. We have worked with clients that have been with credit repair companies for years, unfortunately. But the action plan, there's so much education in that action plan. One of the lenders that the client said, "Here, read my action plan." He's like, I've been lending over 20 years and I didn't know some of this stuff. So there's a lot of detail on it that you're not going to find anywhere else. And again, the guy that invented this system, he won't share it with credit repair companies. He says the law is black and white and they tend to live in a gray area, and he doesn't want to mess with us. For all I know, we're the only non-attorney that has access to this system. Okay, again, just another one. The same one, I hit the wrong button. Sorry. So if you know anyone that has old collections, guys, we can help them. If it's legitimate debt, we can also help them with that. If they can make it through our program, we literally just got one settled. It was $4,873, $4,873. We got it settled for $1,427.14. So I've never had the system not pay for itself in either the amount of debt deleted or the jump in their credit score. If they've got over $20,000 of credit card debt, we do have an attorney if they want to use that. None of our clients have ever had to use that, and we've dealt with higher things than that. But sometimes they just want somebody else to handle it all for them. But we do have an attorney. He does charge for that, though. This is always the next question. How much is it? It sounds great. How much is it? So what I did first, CBS a long time ago did an illustrative website. Well, they did a show on it, and then they had a website to go to. Just how much does bad credit actually cost? And what I did is I put a sample in there. We had a client that fit each one of the risk buckets. And so what I did a $250,000 loan, a 37-year-old male, and a 30-year fixed note. Guys, we're not lenders. It's just for illustrative purposes only. You can figure out interest rates if you want. But when I put it in their system with a poor credit score, oh, I forgot to tell you, this is just the interest they would pay. This is $253,976 of interest on a poor credit score. That's someone that 550 to a 619. A fair credit score was a 620 to a 679. They would only pay $206,018 of interest. With a good credit score, 680 to 739, they would pay $179,674. Our program fee is flat. Okay, it is normally it's $1,200. Okay. So you have an idea. The attorney I was with charged $2,500. The way our clients do it, they put $300 down, and then they have 3 payments of $300. So their total out of pocket is $1,200. We run specials, like right now we're having a COVID special where we waive the last payment. So their total out of pocket is only $900. Again, we work with them till they're 640 mortgage score lendable, and that's that's pretty much it. That's pretty much it. Oh, sorry. And that's, there we go. So if you have, do we have any questions that I can answer?
Okay.
Dana, what is the detriment in credit for closing and a credit card that is no longer in use? And I think you covered that though, right?
I did. A credit card, see what happens is what will happen a lot of times is, let's say you got a gas card in college. It's only $500, but you got it in 1999, right? Well, because you're thinking, oh, let me close some of these accounts. Your credit score is gonna drop because you're gonna lose all those years of history. Okay, it's the history that helps you. It's like 35% of your credit score. So even though it's a lower limit, or something small like a gas card, or Victoria's Secret's card, or I don't know, AutoZone card, if you can get that, if you literally can get that limit up to 1,000, it will help you. That mortgage algorithm. Here's a funny note. A credit card with less than $1,000 limit will help somebody's credit score really good for about 6 or 8 months, but then it will plateau because of the limit. Once it's $1,000 or more, it won't plateau. It will continue to help build their score month after month, year after year. Does that help?
Absolutely. So our oldest credit lines are our most valuable credit lines.
Correct. And don't pay off and close. I mean, goodness, don't get me wrong. Dave Ramsey is great for debt, but he's not great for credit. And credit is the ability to attain debt. Does that make sense? So when you pay off and close things, your credit score gets lower and lower, right? You can't get off the grid, like it or not, as much as you want to. You can't do it because everything's attached to your credit score nowadays. Heck, so many jobs require a great credit score to get the job. You can't be in the financial industry if you don't have a good credit score, right? You can't be a CPA. You can't. You can't have a secret clearance. You can't have a top secret clearance in the military with a poor credit score. Heck, as I said before, your automobile insurance rates are rated more on your credit score than they are rated on your driving record. Crazy, but true.
Very interesting fact. And then I think another thing that you touched upon that I'd like to kind of highlight is not having a zero balance on your credit card. I did that for many, many years, never could break like the 750, 775 credit score, and didn't know why, right? Thinking I'm doing everything right. Well, as soon as I quit paying off the credit card and left $5 or $10 or $20, it didn't even matter the amount on that credit card or each credit card, the credit score went way up over 800. Is that crazy? Just makes
what
no
you
sense.
think makes sense logically. It doesn't make sense on that algorithm. It's just that algorithm.
Yep.
But no,
Very good.
So Dana, I have a question to follow up with Rebecca's question. So instead of taking that credit score, so let's just say you do pay off your credit cards monthly, does it take into account the fact that you're paying that off, but you've already charged more on there in between having it paid off? So does that make sense? So it's not full, you're not leaving it at zero. There's still always something on. You just pay it at the end of the month, and there's still, you've already charged something since it closed its billing period. Well,
what matters is what your balance is the day they report.
okay.
Okay, and it's going to affect your credit score until they report again. Now I know that they've got a few variations in there so they can see that you're. Here's the funny thing: in the credit world, or I should say the creditor world, people that pay off their debt in full each month, they call them deadbeats. You know why? Because they don't make any money off them. Okay, but well, here's an example. I had a doctor who ran his business off his American Express card, $50,000 limit. And of course, he would pay it off in full each month. But when they reported to the Bureau, his limit, his balance was like at $49,000 and he could never get over it. Right? Because what was happening, they would report when he was maxed out, he would pay it off 2 weeks later. But when you do a credit pull, it's still showing maxed out. Does that make sense? It shows until they report again the following month. When I told him, what I told him to do is don't make any changes, continue, because he was building his business off of it, just make more payments. Never let that balance get above 20%, which in his case was $10,000. So when it gets close to 10,000, pay it off as it continues to grow. So that way, it doesn't matter what day they report to the bureaus, he's always in the best light. And just like you found, as soon as that happens, now you're way over 800.
Someone just asked for your contact information, Dana.
Okay. So it's 972-971-3175. Sorry, it was on the back slide and I kind of just glossed through that real quick.
Okay.
There
Well,
we go.
welcome back. Hello.
Sorry about that.
You did great. Thank
There
you
was a button I was
so much. We are so lucky to have you guys join us today. Beautiful.
One of my best stories. Well, one of my best deals. When he came to us, he had a 427 mid score. Less than a year later, when he closed on his house, he was a 744. So yeah, we work with anybody. Honestly, once they're our client, I help them. I can't help myself. I just do. But we change people's lives, and I love that. I absolutely love that.